Ladies and gentlemen, moving swiftly on, please allow me in welcoming our next speaker, a keynote by the founding president of Mobius Capital Partners, Mr. Mark Mobius. Are you online?
Hi, everyone.
Good morning, Mr. Mobius.
Good morning.
We're just taking our family photo on top of the stage for the last session. So if I could just ask maybe 1 or 2 minutes from you. Thank you very much for your patience. Thank you very much. Mr. Mobius, thank you very much for your patience. The microphone is yours, sir.
Pleasure. Thank you very much, everyone. I'm happy to see that the previous panel ended on a very optimistic note, and they see good things ahead for us globally. And I am of the same opinion. In my recent book, The Inflation Myth and the Wonderful World of Deflation, I point out that we are in one of the most wonderful periods of mankind's history because of technology. Technology is making things cheaper and better. And that's the reason why deflationary environment. Now, of course, some people will say, wait a minute, prices are going up in certain areas. Yes, you see prices changing, but you also see the quality of goods getting better, the quality of goods and services getting much, much better. But more importantly, we cannot use the traditional inflation measures such as the consumer price index as a good measure of what is happening, simply because such measures are tremendously flawed. They are inaccurate because they are based on baskets of goods, which are gathered from people's opinions about what they buy for their daily life. And those opinions or those answers that the gatherers get are very inaccurate, simply because people will not register the kinds of things that other people may not like them to see. So we are in a situation where these inflation measures are quite inaccurate. And more importantly, the basket of goods that they use from one period to the other is changing. So the basket that was prevalent in 1950 is very different from the basket today. So you are basically comparing apples and oranges, so to speak. So it's quite disappointing to me to see central bankers making policy decisions that can affect millions of people based on these faulty inflation numbers. More importantly, if we look at the prices of goods and services compared to the salaries and incomes of people around the world, you'll see that salaries and incomes are moving up faster, or at least the same pace as the rise in prices. So in fact, it's wonderful to see that people are experiencing deflation. In other words, things are getting cheaper in terms of incomes and salaries, and they're getting better. Now, what does that mean? It means that the policy decisions should not be made on these inflation numbers, but should be made on other measures of happiness. In other words, we've got to come up with a measure of how contented are people and what do they see in their own lives that is better than previously. This is the kind of policy decision data that should be used to make these important decisions. Now, turning to the situation in the world today as regards to the equity markets. I'm sure many of you are wondering what's going to happen this year with equity markets, because last year we had an incredible recovery from the downturn early last year as a result of the COVID panic. And of course, the market was forecasting to us that this year would be a very good year. And we believe that that is true. From an economic point of view, you will see some tremendous increases in GDP growth throughout the world. And of course, we're already seeing recoveries in many countries. Here in Dubai, I've been experiencing a very, very good environment where people wear masks, but they're able to go about their lives and not be too much impaired by any COVID fears. So we're going to be seeing that. I think you're seeing that in Turkey, and you're probably going to be seeing it in other parts of the world. So we're in a very, very good position as regards to the economies. However, the stock market, of course, is a predictor usually of what's going to happen in the economy. And we've already seen the stock market go up dramatically. And most particularly, stocks of the internet or technological innovators have gone up through the roof. You've seen companies like Tencent, Alibaba, Microsoft, Apple, et cetera, all going up dramatically. But recently, there's been quite a downturn in many of these stocks. And of course, that's putting a lot of fear in the minds of investors. Many people are looking at interest rates, but if you look at the history of interest rates in relationship to the stock market, you'll find that the relationship is very, very poor. In other words, interest rates are not a good predictor of what's going to happen to the stock market. And of course, in this environment, we're looking at very, very low interest rates. Some people are predicting the Fed rate in the US might go to 1.2 or 1.3. We're still below 1. So historically, we're at very, very low rates. However, there is one very important indicator which I suggest you look at, because a lot of what is driving the stocks, internet stocks and technologically related stocks, software stocks, is based on future projections of what could happen to these stocks, even though many of them are losing money. I personally don't like to invest in companies that lose money, that are losing money. And of course, that makes me a pretty bad investor, because if you look at many stocks that were losing money, such as Tesla, they've gone up through the roof and made money for many people. But now we're seeing these stocks, including Tesla, come down pretty dramatically. So we've got to now figure out what is happening. In other words, why are these stocks moving down? And I would recommend that you look very carefully at what's happening in the currency, the Bitcoin type currencies, the currencies that are cryptocurrencies, so-called. I believe that the prices of cryptocurrencies, which are really based on faith rather than some kind of intense analysis, for the most part, for most people, you'll find that these cryptocurrencies, particularly the price of Bitcoin, could become a leading indicator as to what is going to happen to the stock market, because the faith that people have in these cryptocurrencies is similar to the faith they have in companies that are losing money, but which they think in the future will make lots of money. So we have to be very aware of what's happening in the cryptocurrency world. Right now, if you talk to any young person, you see that he or she has tremendous faith in these cryptocurrencies. And if that faith declines or disappears, then watch out, because there'll be a big selling of these companies that are not making money. And are going to be in trouble going forward. Anyway, I think even with a correction, even if the tech stocks decline, I believe we're in a very good position to make money in the stock market over the medium and long term. We and our Mobius Investment Trusts and Mobius Funds continue to invest in Turkey, in China, in Korea, in Taiwan, in South Africa, in Brazil, in India in particular. Our biggest holdings are now in India. And many of these companies have done very, very well. Our performance has been good. So we believe that there's a great chance to be investing in good, solid companies. But I always advise people, keep your head in the clouds, but keep your feet on the ground. In other words, in the clouds, you can look at what's happening in the future. You can hope for the future, make projections for the future, which are very important, but keep your feet on the ground in terms of looking very intensely at the financials of companies and at the real earnings of these companies to really assess what makes sense in terms of investing. Thank you very much.
Mr. Mobius, thank you very much. On a personal note, I don't think there's anybody in the audience that would actually call you a bad investor. That being said, we hope to see you for the next Bosphorus Summit, the 12th, hopefully in person here in Istanbul. Thank you very much and have a great day.
Thank you very much. Bye-bye.
Thank you. Bye-bye.